Good morning and welcome to the Shearwater Group PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives in the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to CEO Phil Higgins. Good morning to you, sir.
Thank you, Ed. Thank you, and good morning, everyone, and welcome to this year's end-of-year presentation. Let's dive straight in. I'm going to give you just a little bit of an overview of Shearwater for those that are unfamiliar with the company. Shearwater is a cybersecurity company. We produce software, and we also sell solutions to our corporate client base and managed services and professional advisory. We have two divisions inside our group. We have our software company, Secure Envoy. There they sell and manufacture secure authentication. This is a must-have technology. Every time you log onto your PC or your phone, you're authenticating. Typically, you'll be delivering your email and your password or your passcode to gain access. That's authentication. Secure Envoy have been in the business now for in excess of 20 years, so a foundation partner of the technology. They have 2 Queen's Awards and won numerous technology awards in addition to that. On the other side of the business, we have our services business, where Brookle and Pentest exist. There we have, with Pentest, they sell, they act as bad people trying to hack your network. They won numerous awards on the global stage for hacking, and most recently they won the Pwn to Own in Toronto, where they hacked the Samsung S23 phone in less than a minute. These guys are world class, and they're our leading pen testing company. At Brookle, we sell our advanced cybersecurity solutions, threat feeds. So we deliver information to corporate clients who are interested to know what the dark web is saying about them, if their data or if there's any breaches inside their networks, and they're also looking for bad behavior inside their networks. So we get involved with some high-level, non-standard technology, so we say, that deliver those types of solutions. Our group currently, when you combine our activities, we're covering circa 50 countries globally. Through our software division, we have a 2-tier distribution model, and we sell through 350 plus resellers. That's rather unique in that it gives us a low cost of activity in working and managing a handful of distributors, and they have the cost of managing the 350 plus resellers around the world. On our services side of the business, we actually sell directly to corporate clients. Moving on. Just a little bit about our positioning. We believe we've got strong positioning. When you look in the media, the cybersecurity is a constant headline. We're seeing breaches constantly. We're seeing data being lost and stolen. And importantly, we're seeing the regulators and government agencies actually increasing the demand on businesses for managing or better managing our personal data. There's more regulatory compliance, there's more legal requirement to do so. So we've got a very strong marketplace which we're moving into. We also, as these regulations and as the government laws actually change, we do see our client base augmenting as well, as they're trying to keep up with technology as it moves and shares from an on-premise to an in-cloud, to a hybrid cloud, to a private cloud. All these different methods of activity. And now with the introduction of AI-based solutions, what we're seeing is a real mixture of the way corporates take their business to market through digital means. And because of that, we tailor our solutions to meet those demands of our clients. We work with large corporate global entities. You know all the brand names. They're on TV, and they range from multiple banks to telcos to retail outlets and now government departments. And what we're seeing is obviously an interest and increased activity in AI-based solutions. We've been delivering those now for a number of years, and it's now becoming a popular headline in the press. Also, on top of that, we've been obviously evolving our own product set and our own services. We, in our services division, we deal with a large amount of top corporate blue chip customers. We are and have been developing technologies to actually come down a layer and start talking with the smaller entities as well, to try and collect some of that mass market, as it were. We're using a enterprise-grade technology. We've cut it up into small pieces, and we're now selling that in through to the smaller client base. Also, with our offerings, we've made our efficiencies a little bit better by bringing together our Xena consulting company into Brookhill, and in the software side, we brought GeoLang into our Secure Envoy. That's streamlined our product offerings. It's also allowed our software test teams to consolidate and be more focused, and that's delivered us a more agile business at the end of the day. And most importantly, none of this works without the client base. We've got a who's who of clients, and we're very pleased to have been serving them for many years. Some of our clients we've had for north of 10 years, and they range from high street banks through to multiple telcos to the retails. And the types of technologies that we sell to these people do tend to attract multiple year contracts. We do see these contracts renewing or repeating themselves. When the technology advances itself, we do then find that, that we'll be replacing that technology with a more advanced solution. Moving on. Adam will come over, will deliver a more detailed representation of the numbers later on, but just to give you the highlights, revenue was down this year, 22.6 million, circa 15%, but more importantly, an improved adjusted EBITDA, up from a 0.2 million loss last year to in fiscal 23 to a 0.9 profit this year, which we're very pleased of. The reason for we've seen some of that is obviously, Adam will go into more detail later on, but we did suffer a FX situation last year, which obviously we've now since hedged out, so we don't have that problem moving forward. But we've also seen some improvements in obviously our own internal efficiencies, our cost base, and also an improvement in margin on the business that we actually sell. And another great point is our net cash, 5 million, up from fiscal 23. Very pleased with that. And when you look at it, it represents what, 50% of our market cap. So we're doing well with that. We will probably follow the same cash cycles as we did last year, and but needless to say, we are cash generative. And adjusted loss before tax. There's been an improvement there in terms of those losses have reduced. As I mentioned earlier on, we've customer engagement levels. We deal with large corporates. We do see a lot of repeat business coming through, and I'm glad to say that where we've had delayed business in the past, we've now started to see some of that release itself as budgets become more available. We are seeing those larger projects come available to us as well, and that's in front of obviously, you know, we've worked with a very challenging market over the last 2 years. And so it's very pleasing to see that we're seeing some of that release. Mentioned earlier on that we about the integration of group companies. Adam may be able to give you some numbers later on as to where some of those savings sit. But needless to say, we have seen a very smooth integration. That's now complete, and we finished that off just before Christmas last year. We've been making some announcements with our RNSs, and we've obviously announced some notable wins out there. And we are, as you know, H2 heavy. We do have a consolidation of business in Q4. It's always very difficult to give you renewals notices in Q4. Some of those deals take us right to the wire, and but I'm glad to say that we did start off Q1 with a healthy order book, which is very good. Also, moving on to our software division and their offering. We did mention last year in the interims that our software development is now, so to say, delivering us a product set which what we believe addresses the marketplace more effectively. A lot of our competition are very much delivering a SaaS-based offering. There's not much on-prem, and what we have been doing is maintaining our R&D in our on-premise technology as well as our SaaS offering as well. And we'll come more onto that later on in the day. And also importantly, we've won 5 awards, which adds to our collection of customer service, innovation, and various competition wins that we've been party of. Moving on to give you a little bit of colouring around our services. Obviously, we're striving to be the partner of choice, and we are in a market space which is obviously driven by large corporate consumer companies. And over the last couple of years, we did see some of those projects slow down due to the COVID, the working from home. They affected our customers. They also affected obviously the decision-making process, which has delayed some of those orders. But what we are seeing now is those coming through, and services represent 89% of our revenue, so it's an important part. And just to break down some of those revenues for you, where we've sold a cyber desk or a data protection solution or even a pen testing project, we do see some of those components being renewed year after year after year. We do see a number of multiple year contracts. On our pen testing division, we do see customers depositing large orders for call off, and they roll year after year after year. And so on our repeat and renewal businesses at 53%, it's very important to see that these are large corporates which are coming back to us time and time again. They see us as trusted supplier. We deliver high valued resources, high valued service, and at a competitive price. And it's a very competitive world. And I'm glad to say that that number is an important one to watch. Also, on the other side, we've got new contracts from existing customers. So what that is where we've sold a contract to a leading bank, and then that contract's finished, expired, and that customer comes back and either replaces that technology or they are renewing it. We also see that new customers, where we've sold them one technology, we then invite in our sister companies wherever we can to expand their position. We also expand our own solutions. So if we're looking after someone's email security, if that's the first project win, then we'll be looking to try and look after their database management, their packet monitoring, their north-south security management, and their fraud and forensic behavior management across the east-west of the network. So we look to sell on one component, and then we look to expand as much as we possibly can. We've got heavily incentivized teams to do this. We have an incentivized package across the business to allow the cooperation between the service companies. A couple of other things which are actually driving our revenues as well. And we've actually been selling some AI offerings now for a number of years. And we have been, we're seeing a lot of our manufacturer partners now are all bringing to the market AI-based offerings. So you will see this featuring more in our presentations moving forward. It will start to show up, I imagine, in our RNSs, where the types of technologies and the solutions we're selling will have an AI-based. Apologies, that phone rang. We do have a heavy AI-based offering, which will increase. And what we are seeing is obviously as the world starts to embrace this, we will be also using AI internally inside our organisation, but we'll be using it in a private environment. We won't be going public with it. Pentest, they had a very successful year, and they've had an unprecedented amount of new tests completed, and we're very pleased to see that consulting engagement. Once we've sold all this technology, you need pen testing thereafter to actually test it each year to make sure it's working and it's still resilient. So you can sort of see why on the services side, Brookcourt with its high-value service offerings and its solution offerings is complemented by having a pen test there, where they can come in behind our client base and actually test these solutions at a chargeable fee. Moving on to the software division. Just want to take a couple of moments just to explain what our software is. So Secure Envoy, it's a well-established 20-year-old company. They've won 2 Queen's Awards, numerous quality awards and accreditations. And they focus predominantly in the access management. So they have been, they started off with two-factor authentication, which is your password and your email address. And then the market's evolved, and we've evolved with it. And now it's a multi-factor. It's now using token and tokenless. You now get the opportunity to log in via your phone through facial recognition, and lots of different opportunities are available now in access. So we all use it every day when we log onto our computers. We have to authenticate. That's exactly what this is. So everyone on the planet is using this. A lot of our competition out there would be, the markets seem to be dominated by cloud-based or SaaS-based, so security as a service, that type of activity. Well, we have also got that, but we've also maintained the development on our on-premise. And the reason we've done that is we have seen a resurgence, a keen interest from government for not using cloud services, but wanting their services on-premise. The threats and the types of establishments they're looking for on-premise. So we are seeing an interest from government in that space alone. We are also seeing some of the cloud services. Some of those are coming back to on-premise. So once again, we're seeing a new emerging market for that. It probably won't going to take over, but it will be a marketplace where we can actually deliver both. So we can deliver more for a corporate client than, say, some of the other organisations where they are cloud only. We also mentioned that the GeoLang company we merged in. And the reason we did that was a number of reasons. First of all, it's a small company, and they didn't have the brand name or the positioning of Secure Envoy and their 350 plus resellers. So it made perfect sense to bring them together. And so that we don't confuse the market, it made perfect sense to drop the name GeoLang in favour of Secure Envoy's brand. With the teams themselves, we've maintained the teams, we've brought them together, and they're on the one management. So that's what we do there. What the technology actually does, it looks for data inside your data stack, inside your databases, your emails, and so forth. Data that should be protected, could be private information, and it searches for that data. And this is becoming a compliance requirement where all organisations have to manage their data position, and they're heavily fined if not. So GDPR is a big driver in all of this. Also good governance of making sure your data is stored correctly, and Secure Envoy's data discovery delivers that. So they sit in that space, and it goes hand in hand with access management, accessing your data, and the data discovery in discovering that data. So you can sort of see why those two make good sense to come together. Back in October, we also announced the release of version 3. In that period, we also spoke about the MSSP offering. This allows MSPs to white label, so they can now sell our product as their own, with their own label on it. So we've expanded the marketplace for that. We've expanded the technology, so it's on-prem and in cloud being developed. And we obviously, moving forward, we will continue to release. I won't forecast to say that we're going to be releasing twice a year, and we have just done a feature release in May, and there may be another one later on in this fiscal year. I'm going to keep quiet for a while, and I'm going to pass over to Adam, that's going to give you an overview of our financials. Over to you, Adam.
Thank you, Phil. Just check you can hear me, Phil.
I can indeed, thank you.
Very good. Good morning, everybody, and I'll walk you through the main financial headlines for our March 24 full year results, and obviously happy to take questions at the end. So firstly, as you heard from Phil, our revenue at £22.6 million was 15% below the equivalent number in the previous year, with lower revenue in both the services business and also the software division, and I'll come to those separately in a moment. So looking first at the left-hand table, which is the reported numbers in the accounts, headline gross profit improved to £6.9 million, with margin at 31% compared to 24% last year. This table is actually slightly distorted due to the services division, where we have had to market our forward exchange contracts within admin costs. So I've also shown a table on the right-hand side, which nets these off in gross profits to show a more consistent year-on-year position. And if anyone has any questions on this, because it's quite technical, I'd be happy to explain it further in the Q&A. But on this basis, you can see a more noticeable improvement in gross profit by 16% in absolute terms and a 9% increase in the margin percentage. As a reminder, the prior year numbers do include a £0.8 million foreign exchange loss within gross profit, and the above table doesn't remove that. But if it did, the gross margin last year, the percentage last year would have been 27%. So even on a more level playing field, it's still clear that our gross margins improved during the year, and I'll explain that in more detail when we look at the divisional numbers in a moment. Underlying admin expenses reduced slightly year on year, despite some cost increases, and this line contains a small element of the net cost savings from the restructuring during the year, with the remainder included in the cost of sales line, so within gross profit. So consequently, adjusted EBITDA was £0.9 million, which was £0.3 million ahead of last year after excluding the £0.8 million FX loss. So moving on to the divisions, I'll start on the left of the page with services, which, to remind you, comprises Brookcourt, Pentest, and the now integrated Exena business. As explained by Phil, revenue was down 15%, as Brookcourt continued to suffer from budgetary delays in some of our larger customers. However, there has been an improvement in the gross margin percentage due to a combination of the improved profile of contracts in Brookcourt and a strong year in Pentest. Admin expenses were lower than last year, mainly due to the cost savings achieved as part of the restructuring. So consequently, adjusted EBITDA was £1.5 million, well ahead of last year, even when adjusting that figure for the one-off £0.8 million FX loss. Moving across to the software division on the right-hand side, and while the headline revenue figure shows a 17% fall year on year, it is important to note the early signs of encouragement that after declining annually in recent years, revenue in the second half of FY24 was similar both to the first half of the year and also the second half of last year. And this has been largely achieved through improved renewal rates, particularly as existing customers have been reassured by the company's future roadmap and continued investment in the product suite. There has also been good growth in inbound inquiries in recent months, and combined with the recent release of an upgraded on-prem version of Secure Envoy's access management software, and also a strengthening of the marketing department, the building blocks are being established to return the division to growth. The gross margin percentage increased largely as cost savings earlier in the year were fully realised in the second half, while admin expenses were similar to last year. So moving back to the rest of the income statement, overall, the adjusted EBITDA at £0.9 million also includes £1.4 million of central costs, which was slightly higher than last year, although the exit run rate is now lower due to the cost savings that are being realised. Adjusted loss before tax reduced from £1.3 million to £0.6 million, with the improvement in EBITDA partly offset by an increase in amortization as previously developed software starts to come online. And the loss before tax was £3.3 million, down from £9.6 million last year due to the absence of an impairment charge. Exceptional items were higher, due mainly to cost of the restructuring and also a one-off abortive corporate project in the second half. Tax remains a credit, due mainly to tax losses and also the impact of relief on R&D expenditure. So the reported loss after tax was £2.2 million, which significantly reduced the reported EPS loss to 9.1 pence compared to 34 pence loss last year. However, adjusted EPS has edged back into positive territory at 0.3 pence per share compared to a 0.4 pence loss last year. So finally, moving on to the cash flow, and again, no real surprises here. Our closing cash balance of £5 million was £1 million better than last year, as Phil highlighted earlier, and that was mainly due to the expected working capital inflow in the second half of the year, and we expect a similar profile in the new FY25 financial year. CapEx was slightly lower than last year as some third-party software development activity was brought in-house. And as I flagged at the half year, the tax inflow in 2024 represented reimbursement of tax paid in 2023 following finalisation of the previous year's tax computations. So that's all from me, and I'll hand back to Phil to close out the presentation.
Thank you, Alan. Right, just another couple of slides here before Q&A. So strategic direction. Obviously, we want to become the partner of choice. Nothing's changed there. We're governed by some 4 key pillars, and one I want to really draw upon at the moment is the organic growth. Obviously, the state of the market's been difficult over the last couple of years. And obviously, what we're looking to do is actually rebuild those revenue streams and get back to what we would consider more of a normal growth pattern. So our interest at the moment and our focus has been very much on that organic growth. And we're going to be doing that, obviously, by continuing with our cross-fertilisation of our business inside the services sector, and obviously incentivising the sales teams to continuously market our software businesses and to sell that solution. And we're going to be helped through obviously the evolving market space and obviously the introduction of AI-based technologies from our vendor partners. And obviously, as we offer that through to our corporate clients, we're expecting to see a bigger uptake of that in the coming years. The delayed projects are coming through, I'm pleased to report, and we will start to see those hopefully in RNSs in the future. We are, as a business, what we are there to do, we're actually there to actually try and help not just our client base, but also internally. And what we actually deliver to our customers, to our own staff, is obviously we try and deliver them an environment where they're incentivized to actually go out and deliver what we need to deliver. But for the companies themselves, it's important that we maintain our expenditure on R&D. It's important that we provide the services, the corporate services for our business to actually thrive and develop. And it's also very important, obviously, to secure new businesses. So there will be an increase in marketing activity, an increase in marketing funding. There are additional resources being brought into that space to help develop it. So what we are looking for this year is very much a return to profitable growth. We're very excited by this year, but it's still, just to touch on our long-term strategic goal, is obviously to get back into acquisitions. But until then, it will be very much supporting that organic position. The outlook. We've covered a few of these points in already, but just to recap on a few of them. As I mentioned, those customer budgets are starting to release, and we have seen some large-scale projects come available to us. We have announced some of those, and just to give you a little bit of colour on those, that 1.4 million that landed, I believe, the very early part of April. We missed last year, where we was hoping that one to fall in. Sometimes that happens. It's the customer budget period dictates when and how they place these orders. Because of the size of the deals that we get involved with, it's very difficult to actually demand orders when we want them. It's at the pace of the business and the client. But what we do try and actually report to you is obviously those large scale opportunities. The run rate business below all of that happens daily, monthly. The guys are delivering all of that, no problems at all. But we do try to bring together those bigger, more interesting ones for you. Some of those contracts, that 1.4 million renew. What that is, that's a mixture of, we're actually delivering a cyber fabric for a telecoms and media company. There's many telecoms and media companies, and I know people will always pick on one. There's several of them, and we deal with a number of them. And to mention no names, this particular one was very interested in protecting their data at rest and in transit, and so they bought a solution from us. And we also manage that solution. We got resources on site that actually deliver that. Very recently, they just acquired another solution for that 4.8 million. And that's a 3-year deal, that one. The 1.4 is a 1-year deal, renewable. Hopefully, then that will renew again next year. The 0.72 million deal, that is for a global financial institution. It's a retail bank. You'd know the name, and what this is part of a project that we've already started, and it was delayed during COVID, and we're seeing obviously the speed now starting to ramp up. This was an extension. They've expanded, and so we're obviously very pleased to see that happening, and we do expect more opportunities in this space with this customer to continue throughout the year. Also, the government departments, that's a big one for us. As I mentioned, we've won a rather sizable, significant contract there during the period, and we've now we submitted proposals for G-Cloud 14. The government will announce those in September, October. Hopefully, we'll be on that list. We've been benefiting from G-Cloud 13, and we've been selling cyber threat feeds to the government. So these are big government departments. So it's very important now that organisations like that are getting involved and buying these products and services. It means the government's got great confidence in the technology, and we can amplify that when we talk to our corporate client base. So we've talked about streamlining operations. We've done that. We're very pleased with that. It's strengthened our position. It's making us leaner, and we're still circa sort of 90 staff inside the organisation, but we believe that we got a good 90 staff, the right 90 staff, and there are opportunities this year where we have headcount room for growth, and we'll be applying additional salespeople inside the business to help meet some of that future growth. So opportunities remain. We obviously going to continue working with our long-established blue chip clients, but I'm glad to say we've now been receiving RFPs and so forth to getting involved with new blue chip clients as well. So we're very pleased to be involved with that type of activity, and it's very important because of the type of technologies we sell, because they're top shelf and they're specialised. There's not many people in that space that do what we do. We do see a lot of repeat business. So when we see that new client coming in, they buy the contract for the first year, there's a high likelihood, a good chance that they will repeat that. So seeing those new clients come in is very reassuring to us. As I mentioned, we're going to focus on that organic growth in the near term, but I'm glad to say that organic growth, and so far we're achieving management expectations in terms of where our position is so far in the year. And obviously we're looking forward very much into the remainder of H1 and into H2. And with that, I think that probably covers all the key points today. So with that, I'd like to hand back to Alexandre for Q&A.
Perfect, Phil, Adam, thank you very much for your presentation. Ladies and gentlemen, please continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. We have received questions today, and I want to start the Q&A session off with this one here, which reads as follows. You mentioned notable contract wins and services. Can you give more detail on length of contracts, and have you secured any other contracts and services other than services?
I can. Obviously, I can't mention customer names, and I can't mention necessarily the technology detail itself, but what I can say is that the ones that I had on the previous slide, the 1.4 million, as I say, that's a mixture, a blend of a solution that that protects data, which is compliance requirements, a legal requirement for the corporation. It would be devastating if that data leaked out. So they don't have the resources themselves. So they actually came to us to actually not only deliver the solution, but also manage the solution. That particular deal was a 1-year deal, but we have been renewing that deal, and this is the second time it's a renewal. So we've done it already. So we will be looking to obviously continue that. We do have large framework agreements in place with a number of our large corporates, and below that framework, we have numbers, quite a few multiple-year deals on key strategic technologies. For one of our banking customers, we have been working on various levels of email security, email gateway security. They're a global bank, and they need to ensure that their communications are robust and strong and highly secure. And you know, when you're dealing at that level, some of those projects do take a long time to roll out. They're international, so those contracts do tend to get written for multiple years, and that particular one is a 3-year deal. But that's part of a program that's already 2 years in existence, and we expect to see, once the whole program is rolled out, we'd like to see, I imagine there'll be a consolidation possibly of that solution, and we will probably see a renewal of that. That's what I'd like to expect. So we do get a mixture. We do try and get annualized billing if possible, but we're at the guidance of our clients and how their budgets are spent, and sometimes that means they're somewhat quite lumpy projects that we get. And I'm glad to say we do get a good blend of 1 year, 3 year, and in some instances 4 and 5 year contracts. Hopefully that answers your question.
Thank you very much, Phil. Moving on to the next question. Can you tell us more about the reorganisation of the business and the benefits it's delivered this year?
I can. Maybe I can do a little bit about the structure, and maybe Adam can add a little bit of colour on some of those savings from a financial perspective. First of all, we had 2 different teams in our software division doing separate things, and we weren't that effective. It wasn't the use of time wasn't as effective as it could be. Bringing that together allowed the management to have a clearer agenda, an easier time of management and product development. And by doing that, it allowed us to focus our time and energy on product development, by releasing obviously some of that burden of duplication. Adam, can you give any details on the numbers with that one?
Yeah, sure. So just to remind everybody, I think we said last year, and reminded everybody at the half year, we were targeting about £1 million worth of savings. So pleased to report that those have been achieved. Within the year, we realised about 0.7, about 700,000 of those, and that was split between, you know, I pulled out most of it in my presentation, but some admin cost savings in the services division, some cost of sales savings in the software division, and some savings in our central costs. So that's, as I say, around 0.7 delivered in the year, with the rest obviously coming through as it annualizes into FY25. So hopefully that covers where all the numbers sit.
Also, it's worth noting, obviously, with Xena coming into Brookcourt, it enabled them to actually get closer to our client base at Brookcourt. So the teams are working closer together. We're seeing opportunities increase there, and that's working very well. As I mentioned, some of those savings, as I say, it allows us to refocus into providing additional feature-rich activities around our software portfolio.
That's great. Just moving on to the next question. With the developments made in software, what sets you apart from your competitors that aids the customer's buying decision?
I think I mentioned it before. I mean, a lot of the competition out there do seem to be focusing their time and energies on building out cloud only or SaaS-based solutions, so they can address a large proportion of the marketplace, but not everyone's gone into the cloud. And we're seeing, as I mentioned, the government are very interested in our on-premise service. So we've been developing and funding R&D into that space to allow the continued development of our on-premise service. So our differentiator is that we cover both ends. We do on-prem and we do cloud, private cloud. We also have a MSP where you can actually white label it, and you can't do that with lots of the others. And so if you're a large corporate, we do present an alternative choice for you, which is gives you more opportunities to secure more of your asset.
Thank you. Expansion into government departments remains a key strategic priority. What are the main challenges and opportunities do you foresee in this sector?
Historically, the challenges have always been the time it takes and the energy it takes to actually get involved with the government. And when you're trying to sell advanced cyber solutions, it's very difficult. Also, from a consulting perspective, the government don't want to pay top dollar for the best consulting pen testers and advisors. They tend to have a cheaper day rate. So we obviously were chasing always the more profitable business, and recently what we have seen is a government's switch to actually looking for and acquiring some of the technologies that we sell, which obviously do present great opportunities for us. So we have invested over the last sort of 9 months, 12 months time in fitting out and completing the applications for G-Cloud 14, which is the government's sort of tendering portal, and we are on G-Cloud 13. We have benefited from that. We've now focused more time and energy. Some of our resources that we've brought into the company have got familiar with selling into the government. So that's going to be a key focus for us moving forward, and we'd like to think that we can pick up on some of those larger contracts, as we did last year and around about September time.
Perfect, thank you very much. The next question has two parts. The first part is, what are the main technologies used by SHEARWATER Group PLC? And the second, can you provide examples of recent innovations or new products?
Well, when I say what are the main technologies by SHEARWATER, that's a difficult one. I mean, we from our services division, the technologies that we use internally, we are lucky enough because we're selling technologies, AI-based technologies. So we're using those ourselves, and these technologies are they prevent ransomware attacks. They prevent hackers from getting in. They're highly you can manage them to an nth degree where we can actually monitor all the traffic going through our network. These are the same solutions that we actually sell through to our client base. The names of these you may or may not know. We use things like Deep Instinct. We use things like Proofpoint. We use domain tools. These are all sort of technologies which some of them will overlap in what they deliver. We have a holistic approach to security internally. We're heavily governed by compliance, so you can appreciate, and parts of our business also got ISO 27001 security. So each of the businesses are multi-layered in terms of their security approach. We have centralized tools which we deliver as well. We keep on top of that, and we keep adding to that layer to make sure that we can be as robust and secure as we possibly can be. There's never any guarantees. We do also have procedures and policies in place to make sure that in the event of anything that we're well governed and we know exactly what we do. We're well trained in that, and we do have a lot of technologies that we sell to our customers we actually use ourselves.
Perfect, Phil, Adam. Thank you very much for answering those questions you can from investors. We have received some admin-related questions, and these and any other questions can be reviewed by the company, and we'll publish those on the Investor Meet Company platform. But just before we direct investors provide you with their feedback, which is particularly important to the company, Phil, could I just ask you for a few closing comments?
Certainly. Today, you've heard from us, and we've been talking about obviously the robustness and of our business. It's been a tough couple of years. We've been we sell resilience. We are resilient, and we've whilst our revenues were down, our adjusted EBITDA is up, and I always consider that the important number. What you have heard today is obviously, hopefully, the confidence from our teams has come through in this presentation. Hopefully, you've seen that in the numbers. We are very confident about the year ahead, which is a welcome relief, to be honest with you. We've been using the phrase historically about cautiously confident, and we're now seeing the opportunities come back to the marketplace. And I'd like to think that we will have every opportunity to grow further and return to a good, stable position. And with that, I'd like to thank you for your time.
Perfect, Phil, Adam. Thank you once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of SHEARWATER Group PLC, we'd like to thank you for attending today's presentation, and good morning to you all.
Thank you.